Welcome back. Good to see you. It's to take inside look at ETFs for a look at how they could help balance the portfolio out. Joining me now, Light, he's the editor of ETFtrade.com. James Lowell is the editor of Fidelity Invest and also writes a news on ETF. Both these guys know what they're talking about, folks. Jim, one of the reasons I want to have you on is I keep hearing from the brokerage companies, the smaller brokerage firms, that retail investors are increasingly opening new accounts because they're fed up with what's going on and they think they could do it better. Or they figure, why not get charged 1%, save it, and try to be a self-direct investor. Are you hearing this, and what does it mean for ETFs?
Bob, I'm really hearing it. It's not just anecdotal. You can see it in terms of fund flows, but the reality is that individual investors who've been burned in mutual funds, burned in stocks and bonds, are looking at ETFs as if they are the better mousetrap. Now, they can have better mousetrap, but there are a lot of risks attendant to investing in ETF. You need to check under the hood just the way you would with sponsor mutual funds. So it's one of the things that Tom and I both do for a living, basically provide information to better enable investors to do just that.
And Tom, my position on ETFs, and it's been known for, I think for many investors, they're cheaper than mutual funds and offer more diversity because you can get into commodities in a way you can. You can also get into other areas, of course, like more diverse international picks. Let's put up, I've asked two guys, they're so smart, to put up their own portfolios. What would you be putting together as a portfolio right now? It depends upon your risk profile. Put up Tom's here for a minute. You have some interesting choices here, Tom. First, you talk about the retail index, the SPDR S&P REIT index, which is up 25%. Then you have the Xinhua China index, and you're into China here. That's a straight China index. And here's interesting. Here's what you can't do with a mutual fund, folks. Look at that, the AIG Copper. Now, this is an exchange-traded note. I want to talk about that. But you're buying copper straight ahead. What is this looking portfolio here? Explain, please.
Well, it is. Well, you know, Jim and I look at portfolios a little bit different. You see, he has model portfolio. We look at trends. When something's above its 200-day average, the trend is positive. So retailers today, boy, you know, so the retailers are down, but value stocks out there within this retail ETF that are very, very positive.
And China?
And China, again, positive GDP growth. There's hundreds of millions of investors there that are moving into the middle class. Going to continue to see growth and bifurcation in these global markets where China may continue forward, but we may be stuck for a while.
Copper's hitting the highest levels since October. See the copper stocks all up here. A little late to get into copper?
I don't think so. Seeing improved growth as far as shipments to China in the copper area, I think that's going to continue as well.
I just want to know an exchange-traded note here.
That's
Our
correct.
Credit risks. Give me 10 seconds on why exchange-traded notes are different than ETFs and the credit risk.
Right. Well, again, there's a bank that's going to provide that note to make sure that they get the collation for the price of the copper. So again, if that underlying bank has problems, the ETF has problems.
Jim, you have portfolios here. One's sort of plain vanilla, one other one's quite striking here. Total market portfolio. Here's sort of thing. It's a little bit on the plain vanilla. Again, that's important for people with average risk. You got your triples here, your technology index, the IR's mid-cap growth index, your street cap small growth index. In the last 50 days, the combination of these have had 6.5% growth, 3.6%. Why do you like the portfolio?
The portfolio, as you suggested, is directed to investors who are looking to not simply track the market, total U.S. market, but to deliver some alpha into it. That's what that portfolio has done. As you said, it's up 3.5% versus a loss of about 3.7% for the S&P 500. It is clearly signaling, given its tilt towards the growth side of the fence, because it can go value or blend, that we are in the midst of what would look like, Tom's perspective, a momentum-oriented recovery. And certainly, the aggressive trader portfolio also bears out that trajectory, namely the recovery, even though it may be fractured and only coming in bits and pieces, looks as if it's beginning.
Jim, I just want to know your aggressive trader portfolio. It's one of the most interesting portfolios I've seen in a long time. I look at a lot of these here. First off, you've got the Ultra ProShares Ultra Triple Q. It's a double up on the NASDAQ 100. Then you got the South Africa index, you got the Brazil index, you got the broker-dealer index. This is a strange combination. What's your thinking here?
Let me walk you through it. First of all, it's called aggressive trader portfolio for a reason, very aggressive. When technology is a positive trend, it tends to be climbing out of a deep recession, and I'm not saying we're climbing the way out just yet, but we're beginning that climb. This model portfolio tilted the most aggressive technologies within its hunting fields, that ProShares Ultra QQ. In terms of the financials, obviously beaten down. We are looking at basically a combination of Goldman Sachs, Morgan Stanley, and Schwab really tilt that index heavily. And in terms of its going global, it's looking at Brazil as a strong play in Latin America. It is looking at South Africa as a play on both industrials, gold, and some financials.
Very interesting. Jim, I got to ask you about disclosures here. Are you these?
I do not own any directly personal or professional.
All right, Tom?
We own retail ETF for our clients.
All right, now those of you trying to scribble down what they had portfolio or not, don't worry about it. Go to my blog, tradertalk.cnbc.com. It's in there as well, links to both of these gentlemen's websites. tradertalk.cnbc.com. Gentlemen, thanks.